So over the past 2 weeks, we have seen weakness in global markets and even in the Singapore market as well, due to inflationary pressures remaining high, and there could be talks about pushing rate cuts even further. And of course, over the weekend, we had this news coming out from the Middle East, whereby Iran has launched missiles and drone missiles into Israel as well. So there's a kind of like escalated tensions in the Middle East, and it leads to uncertainty. The fear indicator has gone up as well, and the market started to sell down. So where are we right now for the Dow Jones, the S&P 500, and even the Nasdaq, and even the Singapore Straits Times Index as well, right? Are we starting to see more weakness? Where are some of the support levels whereby some bargain hunting can come back again, which can be an opportunity to get in on dips as well if you're looking to get in on the entire market by buying the ETF, right? So in this video, watch it all the way to the end, whereby I'll dive into the 4 main indexes, right? The Dow Jones, the S&P 500, the Nasdaq, and finally the Singapore's STI. We'll dive into the chart to see what it says and what should you be doing right now. Let's go. Okay, so here is Dow Jones at about 37,753, all right? So you can see that for Dow Jones, right, we have traded higher over the past 1 to 2 months, and we hit the high at this level. This is what we call the resistance level at the 40,000. That is a psychological resistance level. You can see we hit it there, stayed below for about a week, and then the sellers came back, and we started to push away from this resistance. So that $40,000 would be key, right? 40,000 would be key. In order for more upside to happen for the entire market, we need to breach this resistance level. And in terms of the longer term trend for Dow Jones, we want to focus on this moving average. Just look at the 100 days moving average right over here, and the blue line, the 200 days moving average. Both of them are pointing up. In fact, they have been pointing up since last year, January, February. You can see that red went above the blue line, and they have been pointing up. So in terms of a trend in the longer term, Dow Jones has already been in the longer term uptrend, right? But it doesn't mean that in the short term it will only go up and up. Well, in the short term, we can also see weakness. We can also trade lower, like what we saw over here. Look at this, right? From August all the way to October, right? We started to see weakness for like 2 to 3 months in the short-term trend as well, right? Same thing here for about 1 month, beginning of 2023. That's where we saw the short-term trend actually turning down as well, all right? So you can see right now that in terms of the short-term trend for Dow Jones, we want to focus on the 20 days moving average line. So this green line, all right, since November, we saw a really good rally in the markets when they talk about rate cuts in 2024, right? So this green line, 20 days moving average line, started to reverse back up, point up, and it went up, all the way up. And you can see that over the past 1 to 2 weeks, this green line, the 20 days moving average, have started to flatten out, which is okay. It can mean a bit of a consolidation, right? Just above the support, and the support then would be about 38,000, right? 38,000. You can see that was pretty much the resistance in December. January, we broke above 38, which is the support level, right? But over the past week, you can see that this green line has started to point down, and we have broken below this 38,000. I mean, now it's 37,753. So that is where we might see a little bit of weakness in the short term still towards the next support level. And what would that be? Well, I would say this level would be this very critical 37,000. Why? Look at this, right? 37,000 is pretty much where we were right over here 2 years back in 2022 January. So more than 2 years back, we touched it, and the market started to turn down. We formed a downtrend, inflationary pressures, rate hikes then, right? So that was the previous high 2 years back. And you can see when we broke above it, it was good, right? Very good, strong momentum. Started to push all the way up, and now we may be making our way back to this level right over here. Maybe right around that 37,000, where hopefully some bargain hunting can come back again, right? And if we were to see some bullish candles, bullish reversal candles right near the 37,000, or maybe even the short-term trend starting to turn up as well, well, that could lead to what we call a reversal back up, right? Like what we've seen somewhere last year, as I mentioned in October, November, we started to see that reversal back up when the 20 days moving average line pointed up as well. Okay, so let's take a look at the S&P 500 index, right? The index that makes up the top 500 companies in the US. So if you want to trade what we call the S&P 500 index, you can buy and sell what we call the ETF, the SPY ETF that tracks the S&P 500 index, right? So let's dive into it right now. You can see that this is the S&P 500 index trading at about 5,022, right? And by the way, guys, if you like this video so far, go ahead and give me a like, smash the subscribe button as well. That will definitely help out the channel, and thank you so much for doing this, right? So this S&P 500 index right here, 5,022, and you can see that same thing, right? Like the Dow Jones, right? Since November, we saw the short-term trend, the 20 days moving average green line started to reverse back up as well, and we went from like about 4,002 all the way up to like about 5,260, which is pretty much the resistance level over the past 1 month. Look at this right here. We touched about 1 time, 2 times, couldn't get above it, and sellers actually started to come back. All right, and over the past 1 month, you can see that this 20 days moving average line, which has been pointing up since November, right? Up. It has started to flatten out a little bit, which means a bit of a sideways consolidation in the short term, right? Which is actually okay. But the thing here is that over the past week, we have broken down this support level, the 5,100 that we have been holding above since early of March, more than a month. You can see rebounded, and past 3 days, in fact, we actually went below the 5,100 with the 20 days moving average line slightly pointing down. As you can see right over here, I've kind of like extrapolate this green line, but you can see it's slightly pointing down, right? So that is where, right, below 5,100, and you know, this is now the new resistance level, temporary resistance level. We may see some short-term weakness to where? Well, let's take a look at where we could potentially head to. We want to gauge where is the next support level. So the next support level could be anywhere, maybe from about $4,800. You can see over here. So that was pretty much the resistance level about 2 years back. Look at this right here, though. That was before the sell down we have seen in 2022, all right, before the rate hikes and all that, before we turned into a downtrend. And we are pretty much back to this level right over here. We broke above it in January, right? January broke above the 4,800, and that's where it's an uptrend already in the longer term. Plus, we break a key level. That's where a lot of momentum came back, and we went all the way up to 5,260, right? But now that could potentially become the resistance turn to support level. I'm not saying that it would definitely hit to like 4,800, but anywhere near, you know, 4,800 to maybe 4,009. Let's see, 4,009 maybe it could be a temporary support level as well. Maybe a little bit of support right over here. Maybe 5,000 would be a psychological level, but if 5,000 were to give way, then maybe to 4,900 to 4,800. I think right over here, that is where potentially some really good bargain hunting can come back. You can see that's where the longer term moving averages are as well. The red line, the 100 days moving average, and the blue line, the 200 days moving average. You can see that when we headed there somewhere in October, where the 100 days and the 200 days moving average line is, we actually saw some bargain hunting, and the rebound actually happened. So yeah, same thing, right? We might actually head down towards the longer term moving average lines right over here, and that's where if we hold above this 4,800 level, all right, we could potentially see a rebound again, right? So this is the S&P 500 index. You can see that the longer term trend, right, since last year, it has been up since March, all right, but of course in the short term we can also see retracement as well, which is what we are seeing right now. Okay, let's move on to the next one, which is the Nasdaq Composite Index, right? The index that accounts for some of the top technology stocks, all right, and you can see that we are trading at about 15,683 level right over here, right? So let's see where we can potentially head to, and why have we seen selling? Well, you can see that over the past like 2 weeks, same thing, we have headed to this level over here. This would be the 16,500 level. You can see over here, that was where we saw a couple of selling, some pretty bearish candlestick bar, a doji right over here. All right, 16,500, and the support was about 16,000. You can see a couple of rebounds. All right, we have been holding above it for like more than a month, from 16,000 to 16,500. That was pretty much the short-term range, right? But same thing, right? Over the past week, we have broken down. The 16,000 level right over here. Over the past 2 days, you see we have broken down. We are still below it, so not so good, a little bit weaker. And same thing from the 20 days moving average. You can see that it is slightly pointing down. Just looking at this green line, it was like up, flat. Now it is slightly pointing down. So a little bit of short-term weakness in that sense, below the 16,000. So where can we potentially hit to? Well, I would say that the next support level could be at around that 15,500. You can see right over here, that was where we rebounded about 1, 2, 3, 4 times, somewhere in February. All right, also where the 100 days moving average line is as well. All right, and if that were to break down, well, the next support level would be very critical. Where would that be? I would say that this level could be anywhere around the 15,000. That would be a psychological level as well. You can see pretty much that was where we have been holding as support about 2 years back. We broke down the 15,000 and we sold all the way back down. And same thing was actually the resistance level we tested in January before breaking above it. All right, so anything from 15,000 to 15,500, I think those are where some good support or good buying pressure can come back again for the market. Okay, so I've covered the three markets, the Dow Jones, the S&P 500 index, and even the Nasdaq. So I hope we have a better understanding of where are the support levels for each of them and where we could potentially hit to before hopefully some buying pressure comes back and hopefully we see a potential rebound when the short-term trend actually reverses from those support levels that I talk about. All right, and by the way, guys, if you want to have some of the top US stocks that you can get in on dips, that is an opportunity, it's looking a bit more attractive because price level has dipped as well, you can check out this service of mine called the Monthly Edge. All right, that is a premium service whereby it's $97 a month. I'll place the link below, and that's where you get my top US portfolio of stocks, more than 30 over stocks. Every single month you get 2 new US stocks as well, and also this secret Google sheet that shares all the top 30 over stocks, right, which you want to put in your portfolio for the longer term, for the next 2, 3, 5 years. And we have seen growth of more than 100% on average on all the stocks in the TME service. So the link is right below. Okay, so let's move on to the Singapore's Straits Times Index right here at about 3,187. So you can see that for the Straits Times Index, it looks a little bit different from the 3 US markets whereby we have sold off heavily in 2022, and then we saw a reversal turn from downtrend to uptrend, and we have seen prices kind of like attempting to break the high. Whereas for STI, the Straits Times Index, we have been pretty much trading, I would say, sideways since about 2 years back. We didn't really sell down that much, and we didn't really recover that much as well because we didn't really sold off that much as well, right? So it has been trading, I would say, sideways since about 2 years back. You can see right over here, the range is quite clearly from about 3,000, right? 3,000 would be a psychological support level that we've been holding, rebounded, and in fact it's gone a little bit higher to maybe about 3,050, whereby we touch more times right over here. 1, 2, 3, 4, 5, right? So for about 5, 6 times over here as well. All right, since 2021, in fact 3 years, we have stayed above the 3,000 to 3,050. So anything above these levels, I would say that the STI looks okay. We are holding quite well. We are pretty much just rebounding from this level, so all the way up to a resistance level, right? So this level is key. That is pretty much the resistance that we have been trading for more than 2 years. And in order for STI, for the entire market to turn into a bull market or even a very strong uptrend, we definitely need to breach the 3,400, right? 3,400 or maybe even 3,450. Let me just draw another line right over here because that was where we were in 2022. You can see right over here. So 3,400 to 3,450. Those are very critical resistance level whereby we have seen selling just coming back as we were to hit to this level. So in order for the uptrend to form, we definitely need to break this very key resistance for the entire market, right? So right now it's 3,187. So you can see that it's pretty much moving sideways over the past 2 months. Maybe the range has got a little bit tighter from 3,001. Okay, let me just draw another support level because that has been the range 3,001 to maybe about 3,250. You can see right over here. So that was what has happened over the past 3 months. You can see the range has shortened. I mean, a little bit tighter, right? Not from 3,050 to 3,004, but now seems like it is from 3,100 up, down, up, down, up, down again, maybe 3,001 to 3,250. So that is the range for the STI. I mean, if you are trading what we call the STI ETF, you can take note on potentially getting in again as it approaches this support level near 3,001 and then all the way up to 3,250 first. Yep, there we have it, guys. That is the Singapore's STI. And by the way, guys, if you want to get some of my top Singapore ideas by WhatsApp daily, all right? Yes, by WhatsApp daily. Make sure to check out how you can come on board as a VIP client of mine in Philip Securities, where I'm a broker, all right? And you do get some of those ideas, private trainings, updates by WhatsApp daily as well. I'll just place the link below. Click on it to register for free, all right? And that's where my team will reach out to you as well, especially if you are trading online in Singapore, right? And you don't really have a broker. You just have a trading account, online app or mobile platform you log into, and you don't get any ideas or videos or WhatsApp. Nobody contacts you. No idea who your broker even is. It's like a hotline. The link's right below. Click on it, and that's where you can get some service at least, right? So Joey here. Thank you so much for watching all the way to the end. I look forward to see you in the next video. Take care.